We've done state taxes, we've done federal income taxes, and now we're going to talk about Social Security and Medicare. This is more money that is taken out of your paycheck, and so it's important to understand how these work so that you understand how much you're going to be earning after you pay these taxes. It's also important to understand where they're going. And what you'll see is Social Security taxes in particular, very different from the other types of taxes. What you put into Social Security will also determine what you get from Social Security, which is very different from other income taxes. All right, so let's talk about Social Security. And this is just an introductory video. We have an entire class dedicated to Social Security and closely related topics in the future. But for now, I just want you to understand basically what Social Security is. This is a system run by the federal government. All right, we don't have anything like this in the state of Georgia. This is just a federal government thing. That's U.S. government. So this is a federal government system that provides financial support for elderly people, generally speaking, the disabled, and in some cases, the dependents of these people. Okay? Social Security is a pretty complicated system, and if you're like I was, before I started teaching this class, I didn't really understand how Social Security worked, to be honest. I understood that, the government took some money from me. I understood I'd be getting some money in the future. I kind of had those basics down, but the Social Security system is actually pretty complicated, and if you're trying to figure out what you want to do in terms of retirement, you have to keep an eye on Social Security, okay? This program currently independent of income taxes and all other taxes for that matter. Social Security at this moment, as I'm talking right now, is self-sufficient, meaning the amount of money that is pulled into Social Security is enough to pay off everyone who is receiving Social Security, okay? The people that are paying in are the workers. That's me right now, right? As I get paid to teach this summer class, some of my money goes to Social Security, and it goes to these people who are elderly, disabled, or perhaps dependents of people who are elderly and disabled, okay? So you pay in, and then you receive. As long as I survive to reach the eligible age for Social Security, I will receive benefits that are proportional to how much I've paid in. People with higher income tend to pay in more to Social Security, so they tend to get bigger benefits, okay? So the more you earn, the more you pay, up to a limit. We will learn more about this in the future. So the more you earn, the more you pay, and also the more you'll receive in benefits. Okay? So if you earn more money, you're going to get taxed more, okay? You're going to pay more in, but also you'll receive more benefits when you're older. Social Security is a really big program. It's got a lot of, there's people who think Social Security is a good idea or a bad idea, but the bottom line is it is very useful to you if you reach retirement age, but perhaps even more so if you become disabled or if you die. That's probably one other thing I could add up here. It's kind of like a life insurance policy. If I were to die right at this moment, my wife and kids would get funding for a very long period of time based on how much I've paid into Social Security already. All right. So it's a big program. It's one you really need to know about. The tax rate on this is a flat 6.2% of gross income. All right. So if you earn $100,000, you're going to pay in $6,200 to Social Security in that year. So it's a flat 6.2%. There's no marginal tax system. the marginal rate is the same. It's always 6.2%, so it's flat. And then actually, if you hit a certain income threshold, it does go away. And there's specific cases where you don't pay any at all. And we'll talk about that in the future. For now, we're going to just try to keep it simple. 6.2% of your income goes to Social Security, okay? Also, on the same note here, employers also pay 6.2%. So if you are getting paid $100,000 a year, you, the employee, will pay $6,200 to Social Security. It'll come out of your paycheck. But also your employers are going to pay $6,200. This is maybe something you didn't know about at all. The employers are on the hook to pay some of this as well, okay? And here's one thing that a lot of people don't know. If you are self-employed, well then basically you are both sides of the transaction, right? It's kind of like you're paying yourself. So you're both the employer and the employee. So if you're self-employed, you've got to pay 12.4% in gross income. And you'll see this from time to time in this class. Being self-employed is tough. The taxes are often not very favorable unless you're earning a lot of money, and then you can maybe take advantage of some loopholes and some grants and you know, and such things like that, right? Things that rich people do. So if you're self-employed, you're basically going to pay both sides of the transaction. You'll end up paying 12.4% in gross income. The math here is going to be easy, all right? We're going to mainly focus on people who are employees, standard employees like me, right, who works for a business, company, government. Just take 6.2% and multiply it times your gross income, right? So if you earn $1,000, you're going to pay $62 in Social Security, right? That's how it's going to work. It's relatively simple. All right, so that's Social Security. The idea here is that about 40% of your pre-retirement income will be paid by Social Security after you retire. Depending on when you retire, when you start receiving benefits, how much money you've made, how many years you've worked, depending on a lot of things. So if this is something you didn't know, now you know it. Okay, if the Social Security system doesn't change over the years, you can think of it this way. If you work kind of a typical American career, you know, working 35 years or so, retiring at age 60, you might take a few years before you start collecting Social Security, and at that point, it's going to cover about 40% of your income. You're going to get checks from the government, from the Social Security Administration, all right? If you decide you want to retire a lot earlier, or perhaps a lot later, or maybe you take a break in the middle of your career, well, then that's going to change things dramatically. And again, we're going to talk about that when we get to the Social Security chapter. All right, so let's talk now about Medicare. Not as much to talk about when it comes to Medicare. Social Security is a big deal when thinking about retirement. Medicare is a big deal too, but it's not nearly to the scope of Social Security. Social Security is something you'll plan around when it comes to retirement. Medicare is probably something you can get away with not thinking about much until you get to retirement. So Medicare is all about providing medical assistance, funding for medical assistance. This is also a federal system. This is a federal system designed to provide medical care to elderly and the disabled. If you care anything about politics and policy, Medicare is a really big deal when you're talking about policy. Medicare is very expensive, all right? It's not self-sufficient. So basically it requires lots of funding beyond what you will see come out of your paycheck. What you see come out of your paycheck, which, spoiler, I'll go and tell you now, is 1.45%. So 1.45% of your income will go to Medicare. That is nowhere near enough to fund all of the Medicare program. I think Medicare is like 15% of the overall federal government budget. And that 1.45% is not even getting close to funding it. So regular income taxes also helps fund Medicare, all right? So in regards to Social Security, you really need to think a lot about it when planning for your future. Maybe not so much with Medicare, but the idea here is that it's going to cover about half of medical costs for people who basically are covered by this, which is a big chunk of people. I think it's something like 50 or 60 million people right now in the U.S. are on Medicare. Good chance you'll be on Medicare when you're older. It covers about half your medical costs, and you'll need other insurance or pay out of pocket for the rest. All right, so it's about reducing the burden of medical care to people who maybe don't have the means of paying for it. So again, the tax is 1.45% of gross income. Guess what? Just like Social Security, your employer also pays 1.45%. And if you're self-employed, you pay both of those. Because again, if you're self-employed, it's kind of like you're the employer and the employee, and we don't want to give you a break, right? Everybody's got to pay into Medicare, and if you are self-employed and you don't pay both, well, then you're going to pay half, right? If they only charge you for the employee part, self-employed people wouldn't pay in as much. So in doing so here, we level the playing field a bit. So self-employed people pay 2.9%. Right? So those are the values you need to know. The main values are 6.2% for Social Security, 1.45% for Medicare. If you're self-employed, you can double those. And this is the money coming out of your paycheck. Okay? So you got federal income taxes, state income taxes, and you have these as well. One more quick note, just so I don't forget. I just want to make note of this here. If you actually look at your pay stubs that are provided to you, maybe you have those now, maybe you won't have them until you start an official job. But if you see this OASD/EE, this is Social Security taxes. So when I look at my paycheck, I literally see this colon and then an amount of money. It's like this colon $600, right? That's the amount of money I'm paying to Social Security. This OASD stands for old age and survivorship and disabilities, I think. Yeah, old age, survivors, and disability. And this EE here is the employee's expense. All right, and this is how it's going to be coded on your paychecks most of the time. Likewise, if you look at your paychecks, you're going to see this. This is Medicare. All right, and I just say this just because if you look at your paycheck, they're not going to write Social Security or Medicare on there most likely. This is how it's going to be coded. And you need to get accustomed to looking at pay stubs. That's something we'll probably do later on in this class, is look at one of my pay stubs and see if we can figure out everything that's on there. Because if you've never seen one before, there's a ton of information. And you might need to check them to make sure everything's accurate, make sure they're taking taxes out correctly, to make sure they're applying things in the right places. Because what you're going to learn in this class is you probably are going to be complicated when it comes to taxes. If you want to be wealthy and you want to take your money and make it as valuable in the future as possible to you, what that means is you're going to be one of those people who does a lot to their income. They're going to do a lot in terms of contributing to 401k and everything else. So that means you sort of have to understand what your paycheck is telling you. Okay? All right, so we're going to take those 4 types of taxes we've talked about so far: federal, state, Social Security, and Medicare. We're going to put them all together and do an example. Okay, as the final video here for this day 2 in class, here's a question for you. It's kind of an exam style question. Frankly, kind of a tedious question, but it's getting us to the complete picture, right? It's nice to think about federal or state income taxes and everything else, but ultimately it makes the most sense to combine them all together. We need to figure out how much income you're actually going to bring home after making all these various payments, okay? So this is a test style question. Let's imagine we've got somebody who is a regular employee of a business. They live in Georgia, they're single, and they have an income of $44,000. Let's figure out how much taxes they're going to pay, okay? I've given you what you need. You've got the Georgia tax system. On the quiz or exam, I'd have to give you that information. I've got the federal tax system, same deal. I'm going to have to give you that on the exam. And then I would hope that you would memorize these values Social Security taxes is 6.2%. That's a fixed value in this class. It hasn't changed for a long time. Likewise, Medicare, 1.45%. Hasn't changed in a long time. I would say memorize those values because you're going to use them a lot in this class. Okay? So what I've done is I've gone through and solved for all of these taxes, and you should see if you get the same answers as me. All right? For the federal taxes, I use the federal tax brackets over here, and hopefully I applied them correctly, and I got $5,470 in federal taxes. Okay? So if you earn 44 grand, you're going to pay about $5,470. Going to state taxes now. All right, again, I'm just going to apply the values that we have. Here are the tax rates that we have for this individual. Comes out to $2,357.50 in taxes. Social Security, a flat 6.2%. So they end up paying $2,728. And then lastly here for Medicare, we get $638. All right, so that's all the taxes that they would pay. So from that, there's other things I could ask you to solve for. I might ask you to solve for the total taxes paid. I like these types of questions because they allow you to really show your skills off. So total taxes paid, right? Just adding these values up. Okay. And I'll see what I get here. This comes out to $11,193.50. All right, so that's how much total taxes they're going to pay. From that, we can also solve for their net income. Remember, net income is their income, their gross income, minus their taxes. And this is usually the way we think about net income, right? Because it gives us an answer that we really can wrap our head around. In this case, net income is going to tell us how much money they end up with after paying all their taxes. This is how much money they're actually going to get, okay? So I'm going to take the $44,000 and subtract off the total taxes paid. If you haven't figured it out already, this class is math heavy. $32,806.50 is their net income. And then you should also be able to solve for effective tax rate. The effective tax rate is your amount that goes to taxes divided by your gross income times 100. And I get about 25.44%. I'm rounding it there to the nearest 2 decimal points. All right. So what that means is about 25% of their income goes away. About 25% of their income is never seen, right? So to say it another way, about 75% of their income is actually realized, that they actually receive, okay? So we can then think about, you're going to see this on the worksheet. By the way, with the worksheet, I have the videos. I'm sure you're watching the videos, but you got to do the worksheets too. And in some cases, the worksheets contain information that I don't go over here in these videos. I do that on purpose because I want you to do the worksheets, and also because sometimes these videos just aren't a good way to express information. I think the worksheets sometimes are a better way to think through problems. Just to give you a hint of what you're going to see on the worksheet, I might also say if this person spends, let's say, $30,000 and then invest the rest of their money, how much would their money be worth in the future? All right. So if this person spends $30,000 out of their $32,806.50 of net income, that leaves them with about $2,800 that they can invest. And so when it comes to your own financial plan, this is a good way to think about things, right? You have a certain paycheck, you know what that is. You have a certain retirement date that you're targeting, you'll figure that out, okay? And so you might sort of back of the envelope figure out how much you need to be saving now. And I think the examples you're going to see in the worksheet are a good way to start really thinking about the financial planning part of this class. We're trying to plan for the future, And it's through questions like this that you start understanding how you can prepare for the future. And I guess that's it for this. This is the basics of taxes, and I want you guys to keep in mind everything I'm teaching you so far from this is a ridiculous simplification, okay? This stuff is all way more complicated than I'm letting on to right now, because if I try to hit you with everything right now, it would be completely overwhelming. So we're starting off as simple as we can, and then we're just going to keep building, okay? So in the future, by the end of this class, if you don't drop, if you pay attention, you're going to understand why we started it off this way, because things like Social Security, oh man, it can get really complicated.